I got interested in trading through my interest in markets. Later on became a strategist and ultimately traded a lot of the lessons that I had learned over the years. The reason why I continue trading and analysing the markets is really just to continue to develop on a personal basis, but also to develop that performance in the markets. Nothing is certain, it's all based on probabilities, and so by definition we're going to get many things wrong and we're going to make mistakes along the way, but those mistakes are stepping stones to learning and growth. And I think the best traders, and certainly this has been true of my experience and people I've worked with, learn from those mistakes and ultimately continue to trade with a plan, manage their risk, their money. Well, there are general broad-based mistakes, like not trading with not having a plan in the first place, being too emotional, and risk and money management related mistakes. Then there are more behavioral mistakes, which are famous in the behavioral finance domain. I think the general ones, it's the ones that we all probably know and have done. Being too emotional, not trading with a plan, and then risk and money management issues, actually just not maintaining the correct guidance when trading. In terms of behavioral finance, my favorite ones, and the ones that pop up a lot of times, especially in 2018, herding. We all turn to sheep when we fall in love with a market. The one point I make is, in life and markets, love is okay, but being blindly in love with anything is what basically creates the problem. We don't get to see risk. So crypto is an example of that. 2017, Apple and the FANG stocks was an example of that this year. It's not that these stocks or these markets aren't going to do well over the long term. It just means that over the short to medium term, we need to time. We need to use risk management, money management. Apple, 40% drawdown. So these things can hurt, and the pain threshold can be quite bad. So it's just important for us to be aware of objective analysis. So I have a three-step strategy that I generally teach, and that's the first one is awareness. We need to be aware of what we need to change in order to change anything. That actually takes some time because we need to be aware of both things that are related to nature and nurture. So things that we are born with, it's just part of our biology, part of our family heritage, and then nurture our environmental influences and how that might change our attitudes to trading, risk, money management. All of these things filter through into the trade. Once we actually get aware on both of these areas, we then can move to the change step, which I think is, for the most part, is mental work that we have to do on ourselves to retrain our mind, upload a new program in the computer so that we can improve and change. And I think finally, of course, transformation's the big celebration, work in progress, which is a lifetime effort. I mean, it's not an overnight event, but it's something that once you know that you can make the change and you can sustain it over time, you then start to build that muscle. And that actually starts to have results on the book, but it also starts to change your brain circuitry. You start to be able to upgrade the program, and instead of doing all the past patterns again and again, you're starting to be the change that you want to be. And ultimately, you can track this in your trade performance.